Greetings. This is Taj from the FPT family, and I'm going to go over the Nzdchf trade that I took this morning in London session. This is the before picture, and this is the after. So you can check the time here. This was in London session 4:24 a.m. Around 3 p.m. Finally reached the destination. Now, let me show you the breakdown and why I actually took this trade. No, this is a downtrend on NZDCHF, and this is a big bearish candle. However, I do see that this area is trying to be maintained as support. That aside, we know that when price breaks lows, it often pulls back. You should see some form of retracement. So there will be bullish momentum coming in, and with that being said, the strategy I applied was mainly focused around power of three, candle range theory, as well as, accumulation, manipulation, and distribution, which basically encompasses both strategies. So I would map this bearish candle here, and we would want to see a sweep of the low. So that's previous day's low being taken. That's lots of orders below here. So sweep of liquidity, and price quickly reversed into the range. Right. So I was watching price going into the range like this. Right. And I know that price should actually rise if it wants to retest an area and then continue the downtrend. I went on the 5 minutes, and this is what I noticed. So this is where the previous day's low was swept, the liquidity, right? We also want to note other areas of liquidity. So there are stop losses above these lower highs as sellers come down. And then buyers came in. This is the manipulation phase. So this is accumulation, right? It looks like it's in a triangle, descending triangle. And it broke out. This is inducing sellers to actually go into a downtrend that they thought would continue, but no, price quickly reversed, taking out sell side liquidity as well as buy side liquidity. Speaking of buy side liquidity, the market has a reason why it would want to go up. There's money above these lower highs. There's buy stop above this region. There's a bunch of stop losses above these regions. So the market will eventually want to go into this direction since it swept the liquidity below here. It would naturally want to target opposing liquidity. So this would be the draw on liquidity. So we have accumulation, manipulation, and then distribution. When I took this trade, I noticed a change of character. I noticed a break of structure. I noticed consecutive higher highs and higher lows. Higher highs and higher lows, that's a trend continuation pattern in itself. So if you see that, that's a very strong signal. Now, price was descending into this region here. This was my point of interest, yeah? the fair value gap. Notice that there is liquidity in this region as well. There's liquidity here, and there's liquidity here. And this all took place in the fair value gap region. So it formed this double bottom, and at the right side of the double bottom, it did a quick liquidity sweep and then reversed. That's what we want to see. That's actually smart money reversal right there. It normally appears in the form of a double bottom and a quick liquidity sweep in the opposite direction. I saw this bullish candle here. Notice how big it is. And it engulfs these candles here. So that's a change in state of delivery. A small one, but effective. So what I did was to enter after that. With this bullish candle also closing above the wick of this previous bullish candle, that's confirmation for me as well. Naturally, the stop loss would be below the wick or this body, or usually few pips below the low of the candle that formed the fair value gap. So somewhere around here would suffice. First take profit would be the structure itself, the high. Second take profit would be the draw on liquidity up here. It eventually went there. And that's a 1 to 5. Right here was a 1 to 2. So just to recap, open, high, sorry, it would be the open, low, high, close for the power of 3, where it includes accumulation, manipulation, and distribution. This is the 5-minute schematic that took place in the daily candle range, right? And we believe that prices would move higher because it's a daily bearish candle, and we want to see price retest that bearish candle. So naturally, price would want to move higher. In addition to that, we noticed liquidity pools, right? So that gives the market reason to move higher. Okay, and that's it, guys. This is Taj. Continue to trade responsibly. Bless.